Hi everyone, Mr. Johnson here, and today we're going to be taking a look at a little quick instruction about savings account for our savings account assignment here. So we'll get going. These types of savings accounts. So we'll take a look at an overview of traditional savings, money market accounts, and certificate of deposits with unique features. Certificate of deposits are also called CDs. So these benefits and limitations. So each saving option has distinct benefits and limitations tailored to different financial goals and needs. We'll also take a look at the impact of APY, the annual percentage yield, affects how savings grow over time through earned interest on deposited funds. And then making informed decisions. All right, so understanding saving options empowers learners to choose accounts that best fit their financial goals. So a little overview of the assignment we're doing today. We'll take a look at it in a little bit here, but you'll be researching different kinds of savings account. You look for the highest APY rates for traditional savings accounts, money market accounts, and certificate of deposit accounts. So the importance of APY. So the APY shows yearly earnings, including interest and compounding. This is crucial for comparing savings growth because the higher this number is, the more your money works for you technically. It's almost like investing in a stock with how you pick where your money is saved. So for a traditional savings account, it's basically similar to a checking account. You log in, there's all your cash, and you'll get a little bit of money depending on what kind of bank you're at and what kind of account it's set up to be. And if it's a money market account or certificate of deposit, you just have to look at which one you want and what works best for you. So having a high APY is really important because it's free money. It's not too many things labeled as free money, but this one is free money. So you want to evaluate the account factors. So you consider some things like some of these accounts have a minimum balance that you need to have the account stay open. So you can't just throw $1 in. You have to have, say, minimum of $500 or $1,000. You'll find that out today. Withdrawal limits, how much you can take out within a given, say, whatever they have, say, day or week. You can't just take out a ton of money. And then there's also penalties you'll take a look at when selecting these best savings accounts. You look at all these account factors for which one's the best one. And then you also complete the data table. You'll fill out the table with the institution name, the APY, notes for each account, and you compare these options. And we'll take a look. I'll give you a little freebie. We'll take a look at an example together. So for a traditional savings account, this offers a secure place to store your money with interest, though it's normally at a much lower APY than the other products. It's because it's easy to access these funds. You're allowed to access them basically at any time. They're not tied behind anything, which a money market account or a CD might be tied to, and harder to access your money if you had some kind of emergency fund that you needed to buy. Like if you have a hospital bill that you need to pay immediately, or something, car breaks down. That's why it's best to have a traditional savings account, because you can access that money basically immediately. But since you can do that, it's not really working for you a lot because that has a lot lower APY. And it also has this low balance requirement. So these traditional accounts often have a low minimum balance requirement, making them accessible to most customers. But because of all this easy access stuff, there is limited growth potential. It can't be all perfect. So these lower interest rates means that these accounts are less effective for maximizing a long-term savings goals. So for these traditional savings accounts, they're not necessarily for growing your money. It's for saving your money in a safe place where you know it'll be insured if anything happens to anything. But this is a good one to put your money in for a rainy day fund. Keep some money in here in case you have unexpected bills. But if you have an excess of funds that you don't necessarily want to invest your money in because you don't want to lose it, then you would go into something like a money market account. All right, so this MMAs offer a higher APY than traditional savings account do. So this helps users earn more interest on their funds, but it is a little bit more riskier. So these accounts provide limited check writing features, blending benefits of checkings and savings accounts, so you can write checks with this account. This one does have a higher minimum balance, which can restrict access for some individuals, which is why it's a higher APY. It's because there's more restrictions to it. It's harder to do. And there's also transaction limits and fees sometimes. So users, you got to review the terms the way you're signing up for this bank account to match your financial goals if it's worth it. So that's another kind of savings account. And then you also have a certificate of deposit. This one is going to be the highest APY earning compared to traditional savings account and money market accounts. So why? And the reason is because you can't really access your money. So what happens is these depositors agree to leave your money for a fixed term ranging from months to years. So you're going to put your money in this account that's locked in. You can't take it out. If there's fees, like it brings up down here. Early withdrawal penalties. If you need to access these funds, that's where you get penalties. So that's reducing your flexibility compared to these other savings options. It's because they don't want you to take their money out. They want you to do this certificate of deposit because it's a free loan for the bank. So they get your money, but then you get this higher APY. They'll pay you back more money in the long term. And the way the banks can do that is because they take your money and then they invest it into things basically for you. That's how banks make money, is they take all the money that people put in their bank and they go do stuff with it, even though it's your money. But they're promising that your money will be there if you ask for it. So CDs are ideal for individuals with long-term goals who do not need immediate access to these funds. All right, so it's kind of, they have their rainy day fund maybe in a traditional savings account, but they still want their money to make money, which is where they pick this CD. All right, so the reflection here, paying yourself first means prioritizing savings before spending things on other expenses to build this financial security. Automatic transfers into these accounts move money from checking to savings accounts, encouraging consistent saving without manual effort. That's a very good tip to do. And then you also have these mobile banking, allow for easy monitoring and savings. Same with checking account. So we'll take a look here at the actual assignment. Here's what it'll take a look like. Get a couple financial institutions, list their APY and list their notes. Do the same thing for money market accounts, the same thing for CDs. And then also this is a little blocked here, but it's talking about the pay yourself thing, which is what we just talked about in that last slide. So go over that there. And I do want to share my screen here. And we'll take a look at this together right here. So I just looked up traditional savings account APY, scrolled through a couple and I saw Huntington Bank. So I clicked that one. And then really easily, I see right here a high yield savings account. You get a 3.03% APY, but this is what I would put in notes here with a minimum deposit of $5,000 in new money. That's what I would put in the notes section. And then this also gives you a money market account. And you can click into more details here, but for this assignment, this is enough. This is good enough. You could earn a 3.66% APY with this money market account. So you put that in the MMA part of this assignment, but with a minimum deposit of $25,000 in new money. That would be what you would put in these notes sections. So go through, Google up a couple more of these high yield savings account or high yield money market accounts, and as well as certificate of deposits. All right, that is it. Good luck on the assignment. You know how to contact me if you have any questions. Thanks.